All right, get some market commentary with James Turp. He's the head of fixed income at Sanlam Investments. Thanks very much, James, for joining us. So the Swiss National Bank has cut rates by 50 basis points, and the European Central Bank is also going to be making a call on interest rates a little bit later. And now there seems to be a full expectation that the Fed Reserve will be cutting rates by 25 basis points. What does this all mean for the South African Reserve Bank and its decision on rates for our economy?
Good afternoon, Nampu. Thanks for having me. Great question to kick off with. Of course, we're all wanting interest rate cuts given the time of year and certainly the state of the consumer potentially. And you're quite right. So, I mean, the big surprise was the Swiss National Bank cutting by 50 basis points, the market expecting 25. They've got a lot going on over there in Switzerland. Their currency is seen as a safe haven purchase, like gold. You buy Swiss francs when there is geopolitical risk globally. So that's an attempt to try and soften the Swiss franc against the euro as well. They've cut rates effectively by 50%. So their base rate now is 0.5%. So a very different dynamic going on over there. Yesterday's US CPI data cementing, it seems, the case for a 25 basis point cut next week from the Fed, as you say. So now what does it mean for us in South Africa? Well, I think the big question I keep getting is, are we not going to cut 50 basis points here in South Africa? And the answer to that probably lies with Governor Lesetja Kganyago, who was quoted earlier this week in saying they are taking monetary policy cautiously and don't want to make a policy error. And I think you can interpret that as they will be moving in 25 basis point moves. And the market seems to agree with that and is pricing in another 3 interest rate cuts next year of 25 basis points each.
Now, the Nasdaq Composite Index, which is basically the tech index, it breached index points yesterday. Is this a time to start getting itchy feet? Because the question has to be asked whether the tech sector may have to correct its valuations going forward.
Yeah, you're right. I mean, yesterday's activity seemingly on the back of this inflation data, cementing that interest rate cut and feeding through to the big performers were what they call these magnificent 7 tech-heavy stocks. And the big one there was Tesla, moving up, I think, close to 6% yesterday. And so the question is it hot? It certainly looks like it, but it keeps going. So it's a difficult one to answer. You know, when it corrects, someone will be right. But for the time being, those stocks just seem to be moving higher and breaking record levels all the time. It's really a difficult one for us to call. But whilst interest rates expected to go lower in the US over the next year, also down by about 100 basis points in total, that is going to support those equity markets. But it's a really difficult one to answer.
All right. Thank you so much, James, for that. That's all we have time for. That was James Turp. He's the head of fixed income at Sanlam Investments.